Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin has hit a major support region here and the battle to reclaim the 50-week moving average is underway. And this is really starting to remind me of our previous version of the how low will Bitcoin go chart when everybody was saying it was impossible for Bitcoin to go back below 80K because the US government was launching a strategic Bitcoin reserve. But what do you know, just a few weeks later, Bitcoin was testing that major support region. But by then, everybody was saying there was no way we would bottom there and we had to go a lot lower because tariffs were going to crush markets. But that did in fact end up being the local bottom, and just a few months later, Bitcoin was back to making new all-time highs. And this is also exactly what happened with our first ever How Low Will Bitcoin Go chart published back in June 25th of 2024 when everybody was celebrating the ETF inflows and saying there was no way Bitcoin could ever go back to 50K. But what do you know? Bitcoin ended up testing that support region just a few weeks later, but everybody was saying we had to go lower because the Japanese yen carry trade implosion was going to destroy markets and send us into a global recession. And what do you know? Just a few months later, Bitcoin was breaking out and making new all-time highs. And now, am I 100% sure that this time is going to play out like the previous two and Bitcoin is going to bottom here before making new all-time highs in a few months? Of course not. If I was, I wouldn't be at nearly 29% cash. But because our macro trend is still intact, I have more spot holdings than I do cash because my base case is that we still have higher to go until the market proves otherwise. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. And I completely understand why some people are saying this time is different from the previous two because we have the US government shutdown, we have the Fed being a little bit more hawkish than expected, and we have the risk of the 4-year cycle playing out once again. But there were also a lot of scary narratives at the last local bottom because the tariff tantrum was happening and the stock market was crashing, and many people believed the AI bubble was popping, which is very similar to what you're seeing in the headlines today. There were also very scary narratives back in August of 2024 when the stock market was correcting and the Japanese yen carry trade was imploding and we were entering another Great Depression. The SEC was going after Coinbase and Binance in September of 2023. And many were convinced the industry was completely done for. And major tops also have bullish narratives that make everybody think a correction is impossible, like when BlackRock first filed for the ETF and people said there was no way we could see any corrections, or when the Bitcoin ETFs first launched and everybody piled into the market, or when we saw those huge inflows coming into the ETFs and everybody was convinced we were going straight to 100K, or when Trump won the election and everybody was sure the strategic Bitcoin reserve was sending us to 200K, or very recently where the Bitcoin treasuries were buying a bunch of Bitcoin and convincing everybody that we were going to go a lot higher immediately. So there's always bearish narratives at lows and there's always bullish narratives at highs. So all we can do is look at the trend and adjust once the trend breaks. But until it breaks, my base case has to remain that we stick with the trend and head higher. And these 20 to 30% drawdowns have been very standard for Bitcoin this cycle. We saw them in May, June, July, and August of last year. We saw them in March and April of this year, and we're now seeing them once again. Of course, eventually one of these will materialize into something bigger, but until we break our trend and the market proves it, I think it's too early to be concluding that the cycle is over until we see more evidence. And now I know these fearful periods are difficult because the market is going down, especially if you're in altcoins because you've been promised alt season over and over again, or you've tried leverage trading because your favorite influencer told you it was free money and encouraged you to use the referral link so they could get commissions every time you get liquidated. We also see lower and lower price targets like 60K, 50K, and 40K Bitcoin during these corrections because those posts get way more engagement on YouTube and X. We also have a lot of traders getting nervous here because we're seeing a range breakdown for Bitcoin similar to March of 2025 and back in July of 2024, but those did end up getting reclaimed. So this time that can happen as well. but we do want to see it reclaimed quickly. And we continue to see Bitcoin spot ETF outflows here, as you can see very clearly here, similar to what we saw back in February and March of this year. But these tend to be very correlated with sentiment. We see the biggest inflows when investors are greedy and piling in, and we tend to see the biggest outflows near local bottoms when everybody is fearful and selling. And a lot of investors still have PTSD when looking at the previous two cycles and how they are the exact same length from bottom to top as to what we've seen recently going into the October top. And that's causing a lot of long-term holders to start taking profits. Again, these long-term holders are not exiting their entire position. They're just locking in some gains on rallies and buying during dips. And MicroStrategy continues to capitulate here. It does look like it's about to bounce in the short term because we saw a trade below the previous range low and closed back above it, which is usually a textbook range reclaim and usually results in a bounce. Perhaps investors are getting excited about the recent offering of STRE and how that could result in MSTR buying some Bitcoin in the short term. So for me, instead of trying to figure out if all of these strong bearish arguments end up being correct or if all of the strong bullish arguments end up being correct and trying to juggle all of these narratives, I prefer to just focus on the 50-week and 200-week moving averages. We know that Bitcoin loves to return to its 200-week moving average during bear markets, so the further you are extended from it, the more risk you have to the downside when Bitcoin inevitably mean reverts. But the closer you are to it, or even better, if you can buy Bitcoin below it, the better price you're getting for a long-term hold. As for the 50-week moving average, as I'm sure you're all well aware, Bitcoin loves to retest it during bull markets, but once we break below it, it's a sign that we have entered a bear market, and it has a 100% hit rate for calling bear markets historically for Bitcoin. And as of right now, Bitcoin is in the fair value region, which is why Monday's free weekly report was called fair value. As for seasonality, November is off to a rough start, but Bitcoin still has plenty of time to turn it around, especially because so many investors are capitulating here and flipping bearish. But as long as Bitcoin continues holding support here, I have to expect it to head higher. Bitcoin's MVRV ratio is near where it bottomed in April of 2025, telling you that investors are sitting on less unrealized gains here. Another way we can look at this is by looking at the supply in loss. It is now at a similar level to the past 3 local bottoms. Short-term holder SOPR is also showing signs of short-term holder capitulation, similar to what we saw at the last 3 major bottoms. And we still have a lot of positive catalysts on the horizon. We have the US crypto bills passing through Congress and are just being delayed by the shutdown. We have both the market structure bill and the stablecoin bill. And we know the US government shutdown has putting a strain on liquidity, but it will definitely be reopening soon. And last but certainly not least, we know the Fed is going to be stimulating the economy into a bubble because of what fiscal and monetary policy are going to be doing over the next year or so. And although the GLI has been choppy, resulting in choppiness for Bitcoin, we do know that the Fed is going to have to cut rates more than the market is currently anticipating because of their recent hawkishness. There's just no way they only cut rates 3 times in the next 12 months. That recent hawkishness is putting upward pressure on the dollar, but I do expect it to roll over when they realize they have to ease more aggressively than the market is currently anticipating. There's just no way that rates can remain elevated for that long without breaking everything after the economy got used to such low rates for nearly a decade. We know that QT is going to be ending on December 1st, and it wouldn't surprise me if QE started very soon after that. And because of that, I expect the global liquidity index macro breakout to continue and put upward pressure on gold and Bitcoin as well, even though they may not rally at the exact same time. I do expect Bitcoin to do well during this gold consolidation. Right now, we just need to get through all of the fear and uncertainty surrounding the 4-year cycle. And it is ironic that even JP Morgan is more bullish on Bitcoin right now than most Bitcoin holders, as they're saying Bitcoin looks cheap compared to gold. Now, I don't think 170K is fair value, but it is ironic that JP Morgan is more bullish than a lot of the Bitcoiners you see on YouTube and X right now. As for the S&P 500, it continues to see a small pullback here, putting some downward pressure on Bitcoin, but this really isn't surprising after the essentially 40% rally that the S&P 500 has had this year since the tariff low. And I do believe it's going to head higher once this correction is over because we have positive real GDP, and the GDP is expected to increase in Q3 because of all of the AI spend. And we know the Fed is going to have to ease because of the weakening labor market. Even though inflation is remaining stubborn, and I expect the data to back that up once the US government shutdown ends. As for Ethereum, clear signs of capitulation this week with a nice bounce off the 50 and 100 week moving averages. We really want to see a close above the range mid at 3,400. This asset has been quite the roller coaster this cycle. We had a range set in early 2024, then had a deviation below that range, and then a deviation above the range just to deviate back below the deviation. And then once everybody capitulated and threw in the towel, we saw another deviation to the upside where everybody was euphoric and piled back in as Tom Lee was calling for 50K Ethereum and piling into the market. And now we're right back in that same range that we've been in for the past 2 years or so. Similar to Bitcoin, we're seeing a bit of ETF outflows here, and Ethereum Bitcoin continues to consolidate. We do need Bitcoin to confirm a local bottom here for Ethereum to start outperforming once again. But as of right now, the market is a bit too uncertain to start piling into Ethereum here when Bitcoin is sitting on such a major macro support level. As for altcoins, we've seen a nice bounce over the past few days, but we're not going to see a true alt season until the Russell 2000 enters price discovery, but it continues to chop around that 2021 high level. And we need to see Ethereum enter price discovery alongside it. Those have been the prerequisites for the previous 2 alt seasons, and I don't expect this time to be any different. So I expect Solana to continue struggling and chopping around as long as Bitcoin and Ethereum do. It's nice to see these ETF inflows continue to trickle in, confirming Solana as part of the big 3 alongside Bitcoin and Ethereum, but I don't expect any major upward momentum on Solana Bitcoin until Bitcoin confirms that bottom and bring some FOMO back into this market. And the past year performance is going to start looking quite bleak here because we're going to be comparing to the November 2024 post-election rally. But I do still expect Bitcoin, Ethereum, and Solana to outperform our S&P 500 benchmark over the next 12 months. But as we look forward, the federal government is still running huge deficits. That trend seems to be worsening year after year. Exponential debt growth means exponential money supply growth as the currency gets debased, which is a bullish tailwind for our risk assets that we price in the fiat currency, like the S&P 500, and bullish for our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.